Welcome back to another episode of the Day Trading Show. Today, James and I discuss how to trade crypto and indices. This has been a very important topic that we've discussed briefly in other episodes, but we really wanted to dive deeper today to just go over how we've been finding success in volatile markets that sometimes can leave a bad taste in your mouth if you don't know how to trade them appropriately. So make sure you put your phone away, sit back, enjoy today's episode. I know you're going to find a lot of value in it. All right, everybody, welcome back to another episode. So today we're talking about trading crypto and indices. I figured that this could be a good topic, James, just because we often get questions directed around what we're doing now, trading indices and crypto. I know you've slimmed down your watch list a lot recently to really focus in on a couple of Forex pairs, but also mainly the indices. So I think people are wondering, why did we transition from Forex into indices? Are we still trading Forex? People are asking a bunch of questions. So I figured we could kind of dive in deep here, talk about the good things, the bad things about trading crypto and indices. And I think that'll provide value to a lot of people that were or are in a similar position to where we were before we started trading them with, doing it over the last year now. So how are you, bro? Are you excited for your, before we started the stream, we were talking about the trading battle today. Isn't it tomorrow, Thursday, something like that?
It's on Friday. Mine's on Friday.
Nice.
Yeah, no, I'm super excited. Yep. Going to be cool. Hopefully, we'll get either Boris or your
Gary.
mate from Tampa, Gary. Yep. So my fellow South Africans. So yeah, I'm looking forward to it. It's always fun to be on with, do something different within your trading day.
Bro, it's James Bruce versus Anthony Peter or Peter Anthony, whatever his name is. Bro.
We can mix it up.
That's so funny. It should be Bruce James versus Anthony Peter or whatever. Flop the names, bro. Two dudes with two first names going at it.
Yeah.
Did you ever see the movie Talladega Nights with Ricky Bobby, bro, with Will Ferrell?
No, I can't say I have. No.
Oh, bro. See, because you're in South Africa, so I feel like Will Ferrell's not like a big actor, probably,
yeah.
right?
Yeah,
right.
He's not.
He's huge in America, and one of his first big movies was Talladega Nights, and there's a scene in the movie where he's talking about just people with two first names, and it's funny. I'll find a clip of it on YouTube.
Is Will Ferrell that guy with that tall white guy with the curly hair?
Yeah.
I know Will Ferrell though. Yep, he's acted with Kevin Hart a couple of times.
Yeah.
On Go Hard or something like that.
Yep. Yeah. So yeah, I'll send you the video. It'd be funny. So yeah, what are you guys just trading crypto or are you trading everything with that battle?
I actually only found out today whom I actually going up against in the trading battle. Natalie emailed me the one day, early hours of the morning. I woke up to my emails. I was like, okay. She was like, we're keen to have you back on. So I was like, okay, dope. Yeah, I'll do that 100%. And then I just said, cool, send me the time. I'm there. And then she just sent me the time. I accepted. And then I didn't even ask she didn't tell me who I'm going up against. I just said, I'm keen either way. Even if I was going up against Mark Bellafiore or someone, I'm there. I might get crushed.
No, bro, you still go for it for sure. So is it crypto only like ours was? Or
they haven't told me. They haven't told me, but what was your one the other day? Was that
it was everything? It was everything.
Okay.
They made us place my big trade with it was the S&P 500. So yeah.
Got you.
So again,
I think what they're doing lately, because I've been watching a couple of the episodes after we were on, I think it was beginning of March, so 2 months ago. Yeah. They kind of they're not honing in on one market. They're kind of just going everything, kind of like you can trade whatever you find best. Right. So that's cool for us because now I'm trading as you were mentioning, the FX as well as indices.
So let's talk about that. And I am excited to watch the battle, you going against the guy with the NFT experience to see what he has to say about NFTs. I'm sure Gary or Boris will be questioning him about that. So
big time.
When did you tell everybody, catch us up? Recently, you slimmed the watch list down. Now it's just a couple of Forex pairs in the indices. When did that happen and why?
Cool. So that this actually stems from you because you were the guy that started to get more into crypto, and especially that you saw me get funded, other guys in ASFX get funded, and you're like, well, if I can just maybe get funded and then I can put my capital to use somewhere else on top of and trade the funded accounts, let me do that. And that's where you became open to trading with these prop firms, funding companies, right?
Yep.
And they offer the indices, cryptos, and that sort of thing. And that's where you were like, okay, well, if they let me trade this, because you can't trade indices and that with American brokerage firm, if I'm correct, right? Correct. Whereas in South Africa, we can. But because you can trade them with the funding companies, you started to become more open about trading different assets, right? Asset classes.
Yep.
Whereas I was still a bit turned off because our Forex was obviously working well for me. But then on top of that, in South Africa, there's this bad, I don't know, it's a stereotype that you get these
It's not
NASDAQ
just
killers.
South. Yeah, but it's not just there, bro.
Exactly. But I don't, so it's like this bad stereotype of you get like the NASDAQ killers or the Dow Jones hunters or whatever they call themselves, bro. Like it's just that turns me off of it. So I'm like, what? And then I started to be like, no, this is just like trading a Forex pitch, maybe just a bit more volatile. And it obviously has a little bit more fundamental bias because of all the stocks that are comprised of the Dow Jones, of the NASDAQ, of the S&P 500. So sure. I was like, I actually want to, so it hit me about 3 months ago, maybe 4 months ago. I was like, I want to start getting more involved in the actual fundamental bias of the market, where like what's the NASDAQ doing? What's stocks doing today? What are people saying about stocks in general? Because the stocks, whether you like it or not, actually influence what I've noticed, what influence the currency, influence other markets such as currencies,
sure.
your indices and your cryptos. What we've noticed is also Bitcoin moves a lot like the indices, the main,
specifically the NASDAQ.
Index. Exactly.
Yeah.
So, I'd say it stemmed from you, and you encouraged me to start looking. You even hit me up the one day. You're like, hey, James,
I pushed you on the Bitcoin a little bit.
You're like, let's do some Bitcoin markups together. Let's start doing let's do some indice markups together. And that was like, and then literally like last 2 months, like a month and a half ago, I literally just been only looking at two Forex pairs and 3 indices and just trimming down the watch list a lot. So only trading 2 different asset classes, currencies and the indexes.
Do you enjoy the volatility that you've seen now in Bitcoin and in the indices? Or has it been something that you're not turned away from anymore? Like you're excited about it more now, or are you still a little bit hesitant with it?
So I'm excited about it because as long as you're managing risk, right? Because I'd call myself more of an intraday scalper. I wouldn't say like I don't really hold trades for like 5-6 hours. I'm more like within 2 hours, or an hour, I'm in and out of my trades. I think my average holding time I was actually talking to Tom about this. My average holding time from April was 34 minutes. So fast, I'm in and out of the market. That's pretty quick. So I enjoy it because you can get your move pretty nicely, right? You can get your 1 to 2 hour pretty quickly on it. The thing what I probably was turned off about it earlier was because I used to see people making on the internet, making like from, let's say, $1,000 trading account, $10,000. I'm like, but that's just not sustainable over the long term. You can blow that within a couple of seconds if you're risking so much. So right. I think that's what turned me off. But when I realized it's just like trading any other FX pair, you use the risk calculator that you and I use, 0.25% risk, whatever, 0.5% risk, and you lock it in where you want to stop, how many points away, and that's where you want it. Also, I had to get used to it because they refer to pips, and like we do in currencies, there's now points. In the indexes.
Yeah, I think like what you realized, it seems like, is just because people created a perception of a market and people had an opinion of a market doesn't necessarily mean, number one, that they're right, or number two, that you can't create an opinion about a market or make an idea about a specific market and go trade it. So I think it's separate really because like those people, the variable is the risk. If they're going to call, the bias that you had about indices before you started trading them, that was created by people that were just approaching trading with a different level of risk, it seems like. But if you're approaching it with proper risk, like you just said, then it's just another market. It's just another tradable asset that could be played. So between Bitcoin and the indices, which part of the fundamentals do you like more, or does it just like they go together in your mind? Because like for me, I think it's more separate, where the Bitcoin stuff could be dependent upon or correlated to the indices, but not dependent upon. Like Bitcoin might present long signals, but the indices might not look great for longs. So I could still buy Bitcoin and then have the indices just turn around, if they were looking bearish, turn around and spike higher on the open. But Bitcoin was giving me that long signal because it's more independent, but still could be moving in the same direction sometimes. So which one, like, do you prefer one? What do you think?
Yeah, so I definitely still have a look at Bitcoin every single day. I just enjoy it. Bitcoin's such a nice asset to trade. It moves very nicely. Like Bitcoin can move on an average day, or probably move like 3% up or down. So very, very nice. And it can be like up 2% and then in the day down 5%. So very, very good moves on that. I do prefer at the moment. So my top pairs from April was, my number 1 was GJ, and then my number 2 was the Dow Jones. So, and then number 3 was NASDAQ. So in the top, it's amazing how like in the last couple of months for me, I've literally gone from only trading Forex pairs to now my top two pairs that I'm trading. Two out of my three pairs I'm trading is the two indices.
What's it like trading the indices at the London Open? Because I know with ASFX TV, you've been streaming live to trade live with everybody while I'm asleep. You're doing the London Open Mondays and Wednesdays now. For everybody listening, we'll put a link in the description, give everybody a 3-day free trial to that. So you can come check that out and watch me and James trade. But what are you seeing trading? Because that's way pre-market, that's like middle of the night for New York indices. So what are you seeing then? Are there moves? Is it possible to find some volatility then, or is it very slow?
What I've noticed just for me personally in the last couple of months doing it is that often you get the move from the previous day. So for example, like let's say we get a big shove down yesterday, it's making that retracement back to the 15-minute 50 EMA. So basically it's just making its way back slowly there. You can get some opportunities trading there, especially the Dow Jones. You do get the Dow Jones you can get some opportunity there, but I prefer to trade the indices about an hour before market open, New York Stock Exchange open.
Like my trade today.
Correct. And until about 2 hours after the New York, or 3 hours after the New York stock market open. So I'd say an hour before the stock market open until about 3 hours after the open. That's what I'm finding the best times to trade. And then you get another time again in the evening. I know Jerome's busy doing that. It's like late.
It's like the New York close. I'm still iffy on that. I've told him that. I'm like, I'm not sure how volatile it gets. Some days it gets volatile, but other days it's dry after 12 o'clock. You know what I'm saying?
I'd rather trade an hour before the open and an hour after. Also, for me, just in my timing. So that would be the New York stock market open right now is that because of daylight savings, it was an hour ago on the dot, 3:30 p.m. South African time. So if I'm trading till like 5:30 p.m. South African time, that's nice because the London opens at 9 in the morning my time. So I don't want to be on the desk the whole day. I've got I can trade London open, have a nice little break during the day, go get lunch, go to gym, come back for the open. And so like lacquer that time for me. So it's very, very nice. Yeah.
And I think that was no, go ahead. Sorry.
I just wanted to ask you, when did you, what brought you getting in? Because we know on Instagram, you known as, or your tag is Austin Salvo FX, right? For Forex. What made you get into trading the indices, crypto, and different asset classes?
I think for me, it was like how you said I motivated you, other people motivated me. So you kind of motivated me to look at the funding companies specifically because you were getting paid out in crypto. And I liked that because I've been wanting to start stacking more crypto, right? So that was, remember when we first talked about it, I was like, these funding companies allow you to trade and get paid out in crypto. But then when I started to look at what else they allow you to trade, because like you said, US brokers don't allow me to trade indices. So it was just never something I traded. But once I'm going to go into the game and play in this new set of rules, I might as well look at all the assets. So that's why I was looking at the indices and gold and oil and crypto, because it was all very easy to trade with the funding companies. So I think it was like the ease of access to it was the number one reason I started to finally trade it. I don't think there was a reason beyond the fact that I couldn't trade it with my broker before that. You know what I mean? That would be the main reason that kept me out. That there's no other reason. Anything else that you could say would just be like a human opinion, like an ignorant bias about like, I don't need that crypto stuff. I'm just going to trade Forex. Like that's just ignorant, bro. Like, because there's not always good Forex trades. Like today, nothing looked great for me on the FX side. And I took US 500 short. Like you said, I took it at 7:30 my time. So that's 2 hours before the market open. I hit most of it. The lowest I got on it was at the open. It pumped down around 9:30, 9:40, and it just recently stopped out the rest of it in profit. So it's like I'll trade into the open, lock the stop, or take the full thing basically before the open, and then I would come back and maybe trade after. But now that it goes against the bias, so will you flip? This is a good question. Will you flip if it's like short in the morning and then long in the afternoon, or do you try to find a bias and stick to the bias and then trade that direction?
So that's interesting that you asked that. So Anthony Crudell, I actually posted on my Instagram and Twitter the other day. He posted to Twitter, I retweeted it and then posted it to my Instagram. He said that that you can get chopped around lots in these markets, especially when it's volatile. Pick a side of the mark. He says he's known some people that have made money going long in a bear market and known some people that have made money going short in a bull market. You just got to pick your side of the market and determine when you're going to get in and out. So for me, I like to find my bias based on the 15-minute chart. And if I'm looking for intraday longs, I'll look on the scalp, I'm basically scalping the D1 system in that long direction. Even if it starts to come down, I don't really like to flip my bias. Obviously, I am open-minded. If I've proven wrong and it completely comes down and starts to show that I was completely wrong in my analysis, it's coming down for some reason, then I will. But intraday, if it's just not looking good for longs, then I won't be. But I am long bias on it. But it's just been choppy or whatever. Like today on obviously because of the Palm Bank holiday, then I'll sticking to one bias and I'll just go look at another pair or another index.
Yep. And I think I'm the same way. Like today, like for example, like I said, I was short this morning. So now as it pulls higher, I'm not going to just flip in and buy it. Yeah. Then I'm just chasing momentum, I feel like. And that's just really, really tough versus saying, okay, I'm going to wait and stay short biased and maybe short it this afternoon. You know what I mean? After it pumps up, because my fundamental short bias, at least right now with the current bear market that we're in, the short bias is still in control. So it's like, I want higher shorts instead of trying to get short-term long winners. Does that make sense? Because you could still 100%. Take long losers,
Yeah. And I was actually looking at the NASDAQ this morning. It's off its all-time highs. It's down 23%. Crazy. So I would say we're actually in a bear market at the moment.
For sure, bro.
What 100%, Jim Cramer says it's going to bounce, but that's
well, the trick now is like, do we, so this week is FOMC. If they try to raise interest rates again on Wednesday, you probably will see stocks go lower. You probably won't see the bounce. Yeah.
No, so if they raise interest rates, the stocks are definitely, the indexes are definitely, and stocks moving lower. 100%.
The argument then becomes, though, I don't mean to cut you off, but the argument is then, is it priced in already? And if it's priced in, how much of the change? Because they count it in basis points. So they say, is the Fed going to raise rates by 50 basis points, 25, 75? Okay. If we knew for sure which one, is that one priced in? Let's say they raise 75, but the market only priced in 50. And then there's more drop to come because now it's worse than expected kind of thing. Like, it's very hard to tell, but I think you just read and react. Everything is bearish. Everything says this is not time to buy the dip. We have not turned yet. Let the 8 and 21 cross up. Let it catch some upward momentum before we have that conversation. Right now, you're taking out yearly lows, right, for 2022. And you're approaching it on the 2020 lows in some situations for some individual stocks.
Pretty hectic.
Which was that was like COVID lows. So some of these stocks like PayPal,
Netflix,
DocuSign, Netflix, bro, not DocuSign, Teladoc. Yeah, bro.
Yeah, T-Doc.
T-Doc, bro, they're down like 80%, 70%.
Did you see that with ARK Investments, Kathy Wood? She's on the hot seat, bro.
She just keeps buying everything, even as
she doubled down on T-Doc going into Friday and on Thursday evening, and then it just dropped more on Friday and it's dropping more today. It's pretty hectic.
It's very
Mark Minervini's been on her case on Twitter.
I love it, bro. I love it,
bro. He's saying that, what did he say? When smart people ignore risk, they become dumb people. So he's saying that Kathy Wood's a good investor, but like, she's just ignoring risk. She's doubling down and she's losing people. That ETF of hers is down like 70% from its all-time highs.
It's tough, bro. Gotta give her credit. Like, these funds can't buy and sell things like we can, where we can wake up today and sell the market. They can they're trying to position in and be right for the long term, just buy and hold. But like, what if we're entering a period of time where the market doesn't go up, market goes sideways for 10 years, and 10 years it's just range bound? You know who makes money then? People like us that are flipping, buying and selling every day, that are unbiased.
That's what I was going to say. I liked your tweet the other day when you said it's a day trader's market. You can be long the one day and short the next.
Nobody disagreed with me.
And you can make money both days.
I thought that tweet was going to get a bunch of hate, and it didn't. So I can't be the only one thinking that.
It's true. You can be long the one day, short the next day, and make money both days. That's what I enjoy about being sorry, you're just lagging out there. But that's what I enjoyed about being a day trader, is that you can have your bias for the day, and as long as you stay on it, you can make money going both ways. Like those ETFs, as you were saying, like, she actually came on CNBC and said, it's good that I come out now. Listen to this confidence. She says, she comes out and she's like, it's good that I come out now when everybody's angry and raging, because when these stocks are starting to soar, I don't want to come out then, because then I'm going to be like, I told you so. I'm like, jeepers, how's that?
Even Amanda, bro. You got to
I told Amanda about this thing, and she's like, wow, like, because Amanda knows what Amanda, my girlfriend, she knows what I do, obviously, but she was watching me. She's like, geez, who's down 80% or 70%? I was like, no, this like investor. And then she's like, wow. And then she was watching with me for a bit. She's like, shit, that's confidence right there. But
for sure, bro, that is definitely confidence. But like you said, Mark makes a really good point. Smart people are only smart people until their confidence and their ego get too big and they stop making smart decisions, you know?
Exactly. Yep.
But I think to circle this conversation back to stocks and how we're trading them, it is cool to be more involved in global markets and understand where are the indices? What are people feeling? What is CNBC talking about? What is Twitter saying? And like you get all this information through social media and through the internet. And when we get to come in and make decisions about where we think markets will go. And I think that's super fucking cool. Like that gives us so much power. Like this is the best time ever to be a day trader because you have so much information. And I think if you understand technical analysis, it takes more time to learn the fundamental side of like who to listen to, what not to listen to, what's important, what's not important. But once you get that done, the technicals and that together really, I think, are what make you a great trader. So if you put good technical skills, like I like to think you and I have after so many years trading, plus now decent, if not good fundamental analysis, you put that together in a volatile market like a Bitcoin or an indice, we're going to get some fucking rips, bro. We're going to make some money. That's why I just passed phase 1 last week. Like we're going to move the ball forward because of that, you know, because of the 100%. Volatility.
And the thing is, like, you don't even be risking big amount, 0.25% rips 3R, you're getting almost close to 1%.
Be okay with taking small wins. Like today, I risked 0.25% and I only pulled 0.35%. I didn't pull a huge win out of it. But when they start to stack up, and you start to do 0.3. Well, now we're at 1%. 3 trades in.
Think of it like this. If you make 0.35% a day, it's around about there. Don't quote me on this, but it is around 0.35%. If you make 0.35% every single trading day, I'm not saying weekends because I don't classify that as a trading day, you'll make 10% in a month. Just by making 0.35% a day.
People, you know, this is again.
But people don't think of it. They think they need to make a percent to eat every single day.
Right. They want it all in a day. They want the short-term gratification. It's not enough for them to just put out like, dude, compared to now. Like,
and I get stuck into that mindset as well. I think we all do at some point.
Sure. But I think compared to where we were, it's way more manageable now because we both see the longer picture more clearly. You have to like paint the picture of the future very clearly to say, I'm going to take small wins. Because if you keep going for big wins, you're going to strike out and that's going to really hurt. And then it's easy to go off tilt once you take some losses. And then off tilt, you blow the whole account. Like we've seen many people do even in the Black Shirt Club. So at the same time, while last week we talked about a lot of Black Shirt Club members getting funded, we've seen a couple of Black Shirt, not many, but 2 guys specifically, trade too much and dig themselves off edge and then off tilt and then they're gone. So it's more important, I think, to see the longer picture, get those compounded wins, start to really rack up. Then you've got profits to play with. You're not starting at 0 and going negative. You're up $3,000 and you're playing with some profits. So it's easier to take a loss now. So especially like initially, like I just started the phase 2 this week, or just starting a new account, just starting a new funding challenge, whatever. It's really important to just bag a couple of wins, even if they're not the biggest wins in the world. Get some profit to then play with some profit.
Get some confidence.
Get some confidence. Yep. 100%.
And also most people when they first get into trading won't know what 0.3% feels like on a 200 grand account, what 0.3% feels like on a $2 million trading account. So once you experience it for yourself with those, started to get those bigger numbers behind your,
you don't need to put a bunch of risk up.
Exactly.
Right. Why would if you go around and you get a bunch of money, and me and James raise a bunch of money from all of our friends and family, why would we want to put 5% of it on one trade? Like they would kill us. You know what I mean? If they figured out we did that, they'd be like, why would you do that? That doesn't make any sense.
100%. That's why it's like once you experience it yourself, it's so much easier.
Big money makes big money. Small money makes small money. Risk is still 100%. The most important constant, no matter how large or small your account is. Risk first. So yeah, if you guys are listening, we appreciate you listening all the way through to the end here. If you're going to go and start to trade Bitcoin and crypto and indices, just go into it with appropriate risk. They move differently than Forex pairs. Be ready for more movement, be ready for bigger pins, and just be willing to lock your stop and take profits. Don't go for the big ones. They'll come to you. Like last week, I crushed my trades, just crushed them because I stayed in patiently. And I knew that if the chart wasn't saying get out, I'm not getting out. They come. But at the same time, look at today. You're just banging for small little wins. You know what I mean? You have to take what you can get from the volatility 100%. In Bitcoin and the indices. Don't give back wins because then you'll get a bad taste in your mouth, I think. And you'll be like, I'm not trading these. They're too volatile. No, you're too greedy instead of locking your stop. So just keep that in mind, everybody.
100%.
Cool.
I agree.
All right, good deal. So if you're still listening, like I said, we appreciate you. Make sure you check out ASFX TV. It's www.asfx.tv. James and I are streaming there all week, every week. Make sure you guys just check the link out. 3-day free trial. Make sure you subscribe, give us a thumbs up, drop a comment, let us know what you think, and we'll see you guys in next week's episode.
100%. Appreciate you, bro.
Yeah, bro.